morning, everybody. It's Thursday, January 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're discussing this morning, please feel free to drop us a line in the chat area, and we'll get to that during the show. You can also always reach us at info@agyield.com. Quickly here, overnight markets had March corn down a quarter at 459 1/4. March soybeans up 3.5 at 1240. And March Chicago wheat was down 3 3/4 at 607. This morning, export sales were announced pretty poor across the board. 487,600 for corn. That was trending towards the lower end of the estimates. Beans were 280,400, which was below, pretty significantly below the lower end of the estimates. And wheat came back at 128,100, which was very, very low on the low end of the estimates there. CPI data out this morning showed inflation rose 0.3% in December, which was more than expected, bringing us to the annual rate of 3.4%. Guys, kick it off to you guys this morning. Main theme here, we're going to have obviously USDA report tomorrow. Poor export sales going in to the report. And I know we've got some pretty important Taiwanese elections that are going to take place over the weekend. So kick it off to you guys. What's on your minds? And we'll go from there.
Yeah, I'll start. So obviously, I think more than anything, the biggest is going to be the report tomorrow. Just to recap, it's a quarterly stocks count as of December 1st. Which is the first stocks count of the 23 marketing season to back into the yield. So that's probably going to be your main headline for a while. It's going to, especially things like beans, when we're talking about a 6% stocks to use ratio right now, and the current WASDE reports are just sub 6%. A 50 or greater million bushel swing on that stocks report can have big implications for making up for the lack of exports that we're seeing right now, and or adding to the problem that we're not competitive and supply is growing, one or the other, right? It could be bullish or bearish report. And the velocity of that stocks use change is going to happen much faster for a product like beans than it will for corn as well. So I think that's number one. But to your point about the Taiwanese elections, that's also kind of a big thing over the weekend. Is whether who gets elected and how Beijing feels about that candidate, we're starting to see the State Department make more comments about standing with Taiwan. So that that would never be a good thing if it's an escalation there, because we all know what happened in 2018, right? That's one more under the surface geopolitical risk, especially for something like beans that we have to consider for the long term.
It was interesting too, Dustin, I'll building on the geopolitical side, for those that watched last night, former President Trump, spent a fair amount of time talking again about what he did with regard to tariffs and things like that with China when he was in office. So, you probably see the build of that rhetoric as we go into election season, and just something that's out there.
Yeah. Go ahead, Justin. Sorry.
I was going to say, really since those, that trade war, we're still in it, right? It was never, none of those tariffs were ever repealed or anything by the Biden administration. So, we've, unofficially been the source of last resort for China since then, I think. That's why they kind of buy what they need. I think that's why you see these abysmal sales every time it looks like South America or some major competitor is going to have a good crop. They get coverage when they need to from us and want to make sure that they have certainly domestic supplies. But, that I think with South America, with Brazil getting rains and kind of looks like they turned the corner or stabilized a little bit, our sales have suffered ever since then, especially our export base. We kind of started rip and roaring, and now we're way below what we need to. And I think that's what's really helping weigh on the bean market, in addition to obviously the rains in Brazil. Just forward projections of they're going to be harvesting a crop before you know it, and or have an uphill battle on gaining, more export sales.
Yeah. Go ahead, Dustin.
Well, Yeah, we had that phase 1 trade agreement that was implemented January 2020. And, at the time, everyone thought, well, there's no way China is going to possibly fulfill that. And then they surprised a lot of the market late 2020 going into 2021 with like becoming the world's largest buyer of corn, the U.S.'s largest buyer of corn that we've ever seen for any one location overnight. And then that continued for a year. Then it took a long time for them to kind of, understand that that was it. Like that they kind of bought what they needed to replenish their supplies coming out of COVID. They've been kind of disappointing ever since then. So USDA numbers have had to continue to backtrack from early estimates. We've had growing supply since then. So
it's really interesting. Looking at, on the USDA report tomorrow, there's been some discussions just through private estimates and things like that through the industry that there could potentially be a drawdown on winter wheat seedings. How do we see that having, an impact as we go forward?
Well, you want to take that, Justin?
Yeah, I don't have a strong opinion. I mean, I assume most of the cut would be in hard red wheat area, just kind of a hangover from the big droughts that we've had the last 2 years out west. I would think that soft red wheat with double crop beans would still stay relatively strong. We're coming off of really good wheat yields. Last year, if you look at, just like we've talked about last several days, just cost structure of, of growing corn at these prices versus wheat and double crop beans, a natural rotation. It surprised me to see wheat acres stay strong in soft red wheat. I can't really speak to the hard red wheat, if we're going to, maybe Dustin, you have more insight on some of our clients out that way, but I assume it's more drought conditions or actually wanting to get in, maybe holding off for sorghum or something better.
Yeah, we had the fall wheat price was their planting price was pretty strong for hard red and soft red. More for hard red, but we didn't have the Chinese buying yet known when we were making those acreage decisions. But I have talked to a lot of people that had done a little bit of wheat and beans double crop in areas more north than you typically see it even, and they had the same revenue they had for corn on far less cost production. So I think there's a lot of excitement about that, to your point, coming out of the last couple of years of that being fairly successful. And I would think that I wouldn't err towards the low end of the wheat estimates, especially for our SRW area.
Well, what's interesting is SRW, soft red wheat, is the one commodity that's had a giant jump from China in imports. Like we've sold a lot of soft red wheat, more than I can remember, to China in at least a decade, maybe. I could fact check that, but it's been a long time since we've seen real big sales like this. So it's kind of interesting. That would be the one that I think is maybe even a little more optimistic. We've narrowed the spreads a bit. We've done some business. So I guess I agree with you, Dustin. I think, it wouldn't surprise me that they're a little higher than people think. But
I was talking to an operation there through Kansas, and I think that some of these last couple systems that have rolled through, I think they've gotten a nice regeneration of moisture as well. And his point was that they're not overly excited about ever planting corn. I mean, they're primarily wheat growers, and they'll plant some beans here and there and some corn, but does that could overall impact that a little bit too, right? Come spring, if they've got water, they'll throw some corn in the ground as well, or sorghum.
Yeah, the thing is that market does its job pretty efficiently. If you're looking at South America getting rains and you start looking at balance sheets for next year, it's not like we have a really strong need for acres of corn or beans, really.
Right.
We're gonna have so I think the market's trying to find the right kind of balance there with acres, and first thing to do is lower flat price. So I think you're kind of at those levels. We've talked about this. Maybe we overdo it here. Maybe we've already overdone it. Won't surprise me that we kind of march back up into spring to, make sure we do get all the acres. But again, it's not like, the last 2 years where you're kind of going in and it's the acreage battle, right? Like we're not going to have enough of one or the other. This one's kind of like trying to make sure you don't have too much surplus of one versus the other. So I think it's a little different. And you look at relatively tight bean balance sheet. Now, if South America finishes like it looks like, we're probably gonna have enough globally where we don't really need a ton more bean acres here. It's gonna, but we also have crush capacity coming on at record pace. We have strong domestic demand for beans. So the market's, probably rightfully doing it here where they're trying to lose a little bit of corn acres to plant the beans, just to kind of make balance sheets a little more, in balance with historical norms, stocks to use ratios, those kinds of things.
Very good.
Yeah,
Ben, go ahead, Dustin.
I was just thinking too, is the market going to stand for it? We had just like yesterday, FarmDoc updated their break-even numbers. And they had corn up to $5.18 a bushel, I believe, for the cash price. And, if they're just marking down, like, let's say they think the average cash price is $4.50 corn at the end of the year, they're talking about north of $150 an acre loss for planting corn in Illinois this year, just on a, preliminary balance sheet assumption. The market really cares about just matching up supply and demand. Obviously, if you're going to get growers to plant regardless in Illinois, if it's profitable or not, right? You might have some swings of whether or not they do corn on corn or beans on corn. And that's part of our argument for a more even split of acres going into the year versus industry standard. We're talking closer to maybe 89 and 89 for beans and corn, or 90 and 88, rather than USDA at 91 and 87. I think the other big one is 92 and 86. So with that in mind, though, the market doesn't care, to Justin's point yesterday, whether or not a grower is profitable at any given point in time. When we're talking about every grower being not profitable, and at the same token, you have end users showing pretty good profitability, we just had ethanol jump 10 cents here. I don't think that the market is ready to go and take out all that weather premium that we usually take out in June, July. I could be wrong on this. Obviously, the market's going to do whatever it's going to do. But to go push growers way below cost of production, and that would be more dips from here in that DH24 contract prior to the planting window and prior to knowing weather, prior to knowing safrinha corn crop size yet. I just think that'd be a pretty amazing feat for the market to do that, because you're pushing end users into more profitability and you're giving them a really good look at profitability before we even know what the yield is yet. So I just think that's where maybe the path of least resistance isn't a sharp break for DH24 corn. Again, that's just my own personal opinion, not necessarily company opinion. I think that we have to acknowledge, where does that supply and demand tug of war match up? End users are obviously loving this break. Growers are not too excited about selling into it. That's a lot of what I need to know going into the year. Well,
whenever, go to Econ 101, but whenever you have a shift in, supply demand curve, right? Price tends to overcorrect one way or the other, right? So we probably got too high when we were at, $7.50, $8 corn, obviously. But the market needed to do that to make sure it rationed what it needed to get that supply demand back in balance. Same on the downside, right? If it's, it can overshoot it, like we talked about, maybe it's already done it, and it can press things below cost of production for longer than seems reasonable. To your point, I think, eventually you get back to where, you have to be profitable to grow corn. Problem is, in the short run, right? In the short run, people are going to plant all the acres, outside of, maybe the job is to lose 3 million fringe acres or 4 million fringe acres, right? Where they're the first ones that drop out. Like you said, Illinois, Iowa, Indiana, like the core of the belt is going to plant every acre, just how it works. Like that's what those acres are for. Now, does North Dakota need to go plant a bunch of extra acres? No, that's when you go to $6, $7 corn and you force those acres back into production. We should see those come back out. So maybe the total pie is going down at this flat price level, and that's what helps stabilize. To your point, that's what helps stabilize and get things back into balance. And the second part of that is, costs are too damn high, right? They need to come down. So we can't. You just have cost price inflation all the time. At some point, it's got to, prices of things have to come down because demand for those products come down, the inputs.
Very good. Just coming into the open here, guys, also had a late announcement, 175,000 corn to Mexico for 23 announced here this morning. As we open the markets, March corn down a penny, 458 and a quarter. March soybeans down a penny, 1235 and a quarter. And March Chicago wheat's down 4 at 606 and 3/4. A couple administrative things here real quick before we wrap. Last trading day for January futures will be this Friday. And of course, USDA report out tomorrow at 11 o'clock Central Time. We will have a special War Room edition post report with thoughts and comments regarding what the release is there. And then just as an early heads up, grain markets will be open, obviously, tomorrow, closed on Monday in observance of Martin Luther King Jr. holiday, but will reopen Monday night at 7 o'clock Central Time. As always, streaming live every day on X, Facebook Live, and YouTube Live when the markets are open, 8:15 Central Standard Time. Appreciate everybody's thoughts and comments here this morning. It's a good discussion, and we look forward to talking to you tomorrow. Everybody have a great day.
Thanks, Dan.
Thanks.